Yeah, welcome to the half-year report of Hypoport for 2025. So, as you're aware already, our guidance this year, doubling our profitability on the EBIT level basis. This was what we expected, so we are in line with where we want to be right now. Highlights: recovery of the German mortgage market is continuing, driven by strong shift from renting to home ownership. And let's say second highlight is housing industry ERP system, where we have high demand and migrate fast enough our new clients. Lowlights in the other markets outside of personal home business, recessive environment here in Germany is challenging and limits the growth potential right now. And with our valuation business, we are progressing, but in the negative numbers, they're losing money. But the progress gives us enough confidence that next year we will see the break even finally. Deep dive, private mortgage business, our core business here in Germany. We saw a volatile interest environment in the first half year on a similar level like last year. This gave us an especially strong first quarter, but both quarters roughly 100% EBIT above the previous year for the group. Driven by this market environment where rental market is highly regulated and limits ability for young families to rent a new home. And this drives with a good supply side on home ownership and trickling up prices for apartments in metropolitan areas and as well for single-family homes in rural areas. This confidence in the price development was important for the market. So the price shift, which happened now 1.5 years ago, roughly, is stable and creates a certainty to invest in your own home for German families. And yeah, rent supply, one of the few legislation the new government brought into effect up until now this year is a rent break prolongation until the end of 2029. And this gives landlords as well the confidence that they will not be able to increase the rents as the market would demand, actually feeds the pipeline for small landlords to exit this market and sell to homeowners. So in the end, a great trend for us and as well for the German society that finally home ownership getting ahead here in Germany. Europace is taking market share. You see our last 6 years here outperforming the market. In the last 2 years, we had to handle the fact that our previously strongest partner, Deutsche Bank, is reducing their mortgage volume massive. They just reported minus 12 billion for the first half of this year. So their reduction in new production volume is included in our growth figures here. So take this in mind when you judge on our market share gain over the last years. When we look in the sector details, our own franchise system, Dr. Klein, is slightly taking market share in this environment right now. Our advisor network is fully under production and we need new advisors again and support our franchisees in hiring new people right now to ramp up and take additional market share as an independent advisor here in Germany. Savings banks and cooperative banks, both with double-digit growth themselves in the market, but as we take additional sales structures of both industries and with a massive strategic project ongoing in both of the sectors to integrate, bring more of their volume and migrate more of their volume to Europace. In Finmas, it's the integration of the real estate application world in the Europace system, which runs under the project name Rudy. And in Genopace, it's the integration of Value AG, actually, in a fully digital approach for the new mortgage volume. Both are significant initiatives which will drive the volume in both sectors up over the upcoming quarters. A strong recovery together with the market for Europace here. As I mentioned already, the whole market is driven by formerly renties taking home ownership. You see this that the purchase market is on record high level already again on a quarterly basis. We see that we have a very active market in the metropolitan areas with our capital Berlin even reaching already new highs in the price levels we are achieving there. While in rural areas, there's still a long way to go to recover from the price drop in 2022. So this market is active and is normalizing over a period now for 6 quarters, and we expect growth track for the next years here in this shift from renting to homeownership. In addition, we saw a slightly increase in new production volume, especially new single-family homes, slowly taking up again. But in comparison to the pre-crisis level of 2021, you see that we are still far away from this pre-crisis level, and we didn't build a lot at this time. Yeah, we were at 300,000 units. We would need 500,000 units, neutralize market demand. So there's still a long way to go on the new construction side. People wait here for proposed changes in the regulatory environment and subsidies from the government side. A lot is promised, not a lot is delivered by now. Yeah, and as well, still a weak side of our market is financing. Thanks to the sharp interest rate change, people stick to their 15 years mortgages closed up until 2022. Their refinancing will come starting at 2027 and will then increase market share again to the previous crisis level. So this is certain, and this is coming in now roughly 2 years. The structural shift in the markets is ongoing. We see that brokerage without Europace is getting more and more tough in Germany, and significant improve our market share here, and including Dr. Klein as a franchise system. We see strong gains of market share over a period now for 10 years in the cooperative banking world and the savings banking world, and to be continuous, as I mentioned already. And just in the private banking area, we saw a drop now recently in the market share because of the disinvestment of Deutsche Bank from the German mortgage portfolio. So in total for the segment, on track, actually slightly above our expectation even for middle of 2025. So everything fine for preparing the record year 2026 here in the segment. Financing platform, as I mentioned already, the recessive environment is a challenge for German Mittelstand and personal loan business, and as well the housing association supplying renting for social housing, building new social housing, still not in a recovery phase. With all this environment, we achieved a growth in this area, especially because of our success with our ERP platform for the housing associations. But the investment stays high, so EBIT is more or less neutral to last year. Insurance business, a very stable market environment, you can say. For years now, we see that the interest of the industry is increasing. The willingness to pay, the monetization side still lacks. And so we report only flat numbers for the first half of this year. This is slightly below our expectation for the first half of the year, as well that we, in a red number again here, for the full year, we expect single-digit growth rates in revenue and gross profit, and we expect the positive outcomes in EBIT in the positive side for the second half of this year, and to end this still as a transitioning year for the insurance segment. All in all, on group level, doubling profitability, on track for a new record year on the gross profit side, so outperforming 2021, where we still had a completely different market environment in our core market. So it's a solid success in this transition, in this turbulent time which we have right now. On the EBIT side, we are close to our full year numbers of last year already. So our targets of 30 to 36 million EBIT this year is pretty certain to be achieved, and we prepare for a new record year as well on EBIT level in 2026. We will get support from the market here. Expect short and midterm growth from the mortgage market. We expect it to come in the next years in the old corridor of something around 75 to 100 billion per quarter. Driven by a massive ongoing shift from renting to home ownership here in Germany. And with our scalable business models, most of the additional revenue collected here will go to profit. So, short-term outlook, we stick with our guidance, 30 to 36 million for this year in EBIT, and strong growth numbers on the top line. And for the upcoming years, double-digit growth for all numbers to come. And as mentioned already, next year, new record year on all numbers. Thanks for your attention, and check out the other videos here on the CD level.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.